Is the most important part to me, because step one and step two are very important because they correlate into three. You need step one and step two first before you can find three. So the continuation is basically when price, after the correction is over, you're waiting for price to flip the trend and take it back up. So you're basically looking for a reversal using the higher time frame levels, but also using that 15-minute time frame to break down, or even 5-minute time frame to break down when price is actually reversing. So in best case scenario to explain it, you're basically using ICC inside of the trend that we're looking for. And I'm gonna explain everything today. Just make sure, if you've been following this series on day 4, just make sure you guys subscribe and like the video, and also share it with somebody that also wants to get into trading in the most simple way as possible. And I'm going to deliver. So enough talking, get into the video. Also as well, if you want to see me call some of these plays live, then click the link down below to get into the chat. It is honestly free. So yeah, let's get into the video. All right, so now I'm upset. I recorded the first video and it was on my face the whole time and didn't get to see the charts. So I explained everything, and yeah, we didn't catch it. So now I got to re-explain, and that's okay. It's okay. But basically today is going to be going over continuation. Continuation is my entry model of how I get into trades. I'm gonna show you 2 trade setups that I just took recently, how I got into it, why I got into it. But first, you have to remember step 1 and step 2. So the indication and correction are very, very important, right? So let's get into it. First of all, we're going to go based off the 1-hour time frame, and we're gonna look at our levels. So notice how price is going up on this uptrend right here. So we have this uptrend, and we can see that price is remaining structure, keeping its highs and lows intact. So we have our support level here, support level here, support level here, until it gets broken. This is where we start to understand that price is changing trends. Remember, if price is on an uptrend, it should not break its structure unless it's reversing. And what the correction helps you is from getting faked out on if price, because this could have been a liquidity grab, but what the correction helps you, or what the continuation helps you do, is realize that you need that second move down to confirm that price is on a downtrend. And that's what we're going to explain today. So as we see this uptrend, we see that price ends up breaking that level and causing an indication. We have a new low, so we're going to mark this as a new low, new low. And remember, indications will always create a new high or new low, right? So indications will always create a new high or new low. So you shouldn't be confused on if price is, on an indication or not. You shouldn't be confused if it's making an indication or not. Is it a new high or is it a new low? If it's not either one, it's not an indication. And remember as well, when it comes to finding these setups, you don't have to go 30 years back, because a lot of people, they look at their charts and it's like all of this. You don't need all of this information. Just look at the previous price action that's going on. Can you find the high or low? Most cases you will be able to find the high or low. So here we have our high, here we have our support. So here we have our low, right? Here we have our low, here's our high, right? And we can use this. We can even put this into the equation if you want to, right? So put this into the equation. And remember, since we have that continuation on our hands now in our strategy, since we have that continuation, we're not going to take these buys because it only made the indication for us. It didn't come back above that level a second time. And you're gonna see a lot that, waiting for that continuation above that level is going to save you a lot. So once again, remember, mark up your charts on the 1 hour or higher, right? So higher time frames only when it comes to marking up these levels, because they hold really, really strong. So let's break down some entries, right? So as we see here, we have this indication. It creates a new low. Some of you guys are probably asking if we go inside. So let's go inside. Some of you guys are probably asking, like, what do you think about this? Like, these are new lows too. How come you're just only choosing this one? Okay. For example, we can use these lows. It still applies, right? We have the indication, price corrects, and then under this level, it continues to sell, right? It continues to sell, makes a new low off of it, right? So also as well, something I want to explain, when price makes an indication and does the correction, the continuation, normally if price is trending in one direction, is normally the continuation is normally going to create a new indication. That's what you want. You want price to continue to repeat. So indication, correction, continuation, repeat. That's what you want the trend to do. So we can use that for people that kind of want me to show them that. So now we have a indication again, price corrects, and then we have another continuation. And then price makes a new indication, corrects, and then we have another continuation. Now, since we're trading on that lower time frame, so since this is basically a lower time frame trend, because on that 1 hour we don't see that 1 hour, we just got that new low. After price made these two lower highs, we got that new low, right? But after that, notice how price starts to break structure, right? And that's mostly because the higher time frame is always going to take back control and it's going to be way stronger. But this new low is made, which caused this to grab as much liquidity as possible. So normally when price makes a new low or a new high, it tries to grab out those traders. So go back to video 1 and video 2 to understand what I'm coming from. Actually, video 3 should be the one. Yeah, video 3. Video 3 should be the one talking about this, but this new low caused price to want to go grab liquidity from all the people that have their stop losses above this level. Remember, this is our first time hitting these levels, right? Don't go all the way back and be like, no, it's not our first time hitting those levels. Currently, for current price, so since Wednesday, this is our first time hitting these levels. We're not looking back in the past. We're looking at what's happening this week, what's happening currently, what's happened in the past 5 days. So kind of use that for your basis. What happened in the past 5 days? You can even go, I would say 3 to 4 days. 3 to 4 days is all you need to look back, right? What happened in between there, right? So first time hitting these levels. So price is like, okay, there's a lot of stop losses that I can grab. They kind of got in on a breakout. They don't know exactly where price is going, but it's trending down under this level, but they don't know where it's trending to, right? So then price is like, let me grab those stop losses. Once it grabs those stop losses, it wipes all these sellers out the market. So this is their first time being at these new lows. But us, we're going to wait for the second time around, and I'm going to show you exactly how to break it down so you can get an entry. And also as well, I'm going to post my entries. So I'm going to put both my entries that I took in on this trade and the next one. I'm going to show y'all both exactly how to get into it. So also as well, when it comes to trading the indication, correction, and continuation, the indication, you want to mark that up using the 1 hour. So once again, go back to the videos. But fast forward, if you want to find an entry, use the 15-minute time frame or 5-minute TF, right? Time frame. So that's what TF means, time frame. So use those time frames for entries, and I'm gonna show you why. So as we see here, price goes up on the correction. So we have our indication. So this whole move right here is the indication based off that 1 hour time frame. Indication, a new low. Indications will always create a new high or a new low. So now we have a new low. Price goes up on a correction. A correction is for grabbing liquidity. A lot of people ask, how do you know when the correction is over? Well, this is how, right? So what we're gonna do is, since we can't see much here, but we can see price kind of stalling. The reason why I'm choosing this is because we can see here, price makes a little resistance and price is starting to not go anywhere. So normally I would mark the wick in this situation because we're using a smaller time frame. The 1 hour time frame wouldn't show that wick right here. It would just be the candle itself. So what I'm gonna do is mark that as my resistance, the wick right here. I now have a resistance. I now have sellers at this level pushing price down. What I'm gonna do is, since I can't really see too much, I'm gonna try to scale in one more time, see what I see. So now I see a little bit more than what I seen before, right? So notice how price here is building up this uptrend, right? This is normally what a correction is gonna do, right? So now we have a higher high and we have a higher low, right? So now what I'm gonna do is note these, right? So for beginners, please note these. Track your highs and track your lows. So note these, boom, right? So now we see that price is building higher highs, higher low, higher high, higher low, higher high, higher low. So back in video number 1, what did I say? If price breaks the structure, then you should either not be trading it and you should be watching it. So don't trade when it's not following the uptrend structure. So this uptrend structure, I wouldn't say trade it, but it is moving in one direction. It's on an uptrend. So we know it's on an uptrend. But then watch how price, so as you're tracking it, watch how price here starts to develop a whole new demeanor, a whole new setup, right? So we're going to spread that one across, and we have our high and now we have our low. So you can do the same one to all of these two as well. Track your high, track your low, as long as price is continuing to break highs. So if you can see here, one sec, if you could see here, price is continuing to break highs. So that's how we know it's on an uptrend. It's breaking highs, but it's not breaking supports. So then here, if we want price to go higher, it should continue to break highs, right? But here, when it was going back up to break its high, it failed to do so. So now we have equal highs right here. And equal highs is normally telling you like price is not trying to go any higher than this, or why did I put EQ, right? Put EH, equal high, right? So this is basically telling you price isn't trying to go higher, but it's also telling us it's not trying to go lower, because what did it give us right after? A higher low, right? So now we have a higher low and then an equal high, but price isn't going any higher. So now we know, okay, I'm not supposed to trade this yet because price hasn't fully, is not wanting to go up. And if it's not if it's not wanting to go up and it's not wanting to go down, then I shouldn't be trading it because it's not trending. So even though we have that equal high, it's not going higher, we stay away from it. So then we continue to mark our charts out, right? So now we have this higher low. This is our new support since prices. Yeah, I got this right. I have to make sure it was higher low. Yeah, higher high, higher low. Yeah. This low is higher than the previous one. So this is our now new support, right? So now since this is our new support, we can be like, okay, price shouldn't be breaking up below here. So now it should push and use that momentum to make a new high. But what did it do? It made another equal high. So now we're like, yo, price is really not trying to go up. So if it would have maintained in this level and then pushed up, that still would have been good. But what did it do this time? Price ended up breaking that level of support and making a low. So now this is our indication, right? The indication. Sorry if I spelled that wrong. So now we have an indication right here. I'm not going to keep this for too long because it's pretty big, but now we have an indication because now price is telling us, hey, under this level, I have a potential to sell under this level. I'm bearish under this level. I'm trying to be sold under this level. There's not enough buyers to keep me holding up. That's the best way to explain it, right? Price is holding up. So even here, right? Here, buyers are here holding. Buyers are here holding price up. So it's not letting it break levels of support. Price can come back and retest this level if it want to, but buyers should not let this break through, right? Same way with higher time frames, it's just way stronger, right? So here, price says buyers are holding price up as much as they can, but if they lose strength, sellers are going to take control. So sellers are saying like, yo, we got some power to break out of here. Just it's teasing you, telling you like, yo, we have potential to break under here. So they're letting you know in advance, under here, we got control under here, right? Because buyers are getting weak, so we got control under here. That's what an indication is. So then after this indication, we have a correction in the market, which normally grabs liquidity. But what this helps us with is back on. So once again, go watch video number 1. The fundamentals are very important. Since we have equal highs now, right? Now this gives us a lower, us a lower high. And remember, back on video number 1, if price is giving a lower low, so this low is lower than the previous one, right? This one was high than the previous one, but now this low right here, this low right here is lower than this one. So now we have a lower low and a lower high. So this is now telling us, okay, perfect. price is starting to build that trend, right? So what we can do in this situation, I'm not going to nitpick to the perfect position, but under this level, we can sell under this level with our stop loss above this previous level. Now, what some people would do is, since we're selling under this level, we're supposed to target this due to ICC, right? So under this level, we're supposed to have like this. But what people fail to remember is, don't go off that 5-minute structure. Go off the higher time frame. We're looking for price to reverse on the 5-minute time frame because the 1 hour has a new low, and we're waiting for the 1 hour to stop correcting. But in order to do that, we have to dig deeper inside of the trend. So we have to dig deeper inside of the 1 hour to see what's going on. It's the same way with like being a doctor, being a surgeon. You need to go deeper into somebody's body in order to see what's really going on. So if somebody says they have a headache, what does the doctor normally do? They're like, okay, we have to probably do an x-ray or something. They have to go inside to get more information about your headache. Because outside it would show, okay, he's saying he has a headache. But now we have to go inside to see what's really causing the headache, right? So it's the same thing with trading as well. So price will show you, hey, I'm going on this downtrend, but then you have to go deeper inside to understand, is it going to continue or is it not? So you really got to, put that hand to hand. So anyways, with this, you need to use that 1 hour level. So that new low, which is down here off the 1 hour. So you would scale back out. Once you start seeing the confirmations that price is getting ready to sell again on that 5-minute or 15-minute time frame, you can do the same thing on a 15. The only reason we didn't do it on a 15 is because the 5-minute looked 10 times better, right? So then what you would do is see, hey, I got my entry level. Where's my TP? My TP is going to be that 1 hour level that we caused that new low, because that's where the indication is going to be at, or that's where the indication ended at, and that correction. And now we have the continuation. Now, what I always tell people is, this is pretty brand new for some people, right? But what I always tell people is, for the better entry, for a more safer entry for you, what you need to do is enter under that 1 hour level, because this level is stronger and has more momentum, because that's what caused this trend. This is what caused this new low in the first place. So notice how when price got to this level, that 1 hour level, it was a way stronger push here, right? Way stronger push when it was under here. When it was above here, it was like, yeah, it was kind of playing around. But as soon as it got under this level, it started having reactions. It started having those bearish reactions way stronger, right? So what you can do is the same thing. Prices under that 1 hour level. You already have your lower high here too as well, under that 1 hour level. And all you're looking for is price to push under this level. You don't have to really wait for that candle close. As long as you have everything back behind you, there's no reason why you should be getting faked out or anything. You waited for your second time around. Price is showing you is getting bearish. You have all the confirmations to show you that price is going lower. So we have more lower highs. So once again, a lower high here. Let me copy it. There we go. Lower high here, more lows being made, and then another lower high here. So okay, it won't let me just grab this. All right, there. And then we have overall price showing us it's getting lower, even under that level of support too as well, right? So that is the one level. So remember as well, when you're trading this way too as well, you're normally going to trade trends off that higher time frame. So overall, bearishness is what is causing the trend. Because remember, if you want to draw a little trend line too, if you want, this uptrend is now over. We had the characteristics to show us now it's over. So now we're trading based off the trend. And this is where you as a trader start to make decisions if you want to hold longer, if price is showing that it's going to continue, right? So now we have a new low. So what this causes is a new low. And no, you're not going to get off at the perfect time, but just look at those characteristics. So as this happens, as this drop happens, watch this, right? You would once again scale back in to see more information. The 15-minute was showing a little bit, but the 5-minute kind of shows better, right? So now look at this, right? Our normal TP would have been this level, this new low, right? But since price surpassed it, we actually got way more out of it, and price is still going down. price is still building structure down and it's still going down. But watch this, right? So boom, we have price here make a support level. So here we have a support level. And then here we have a high level, right? So we're already past our TP, right? So everything from here is how we treat it, right? How we treat it. So we have our high, we have our low. Price is still kind of equal high here. We have an equal high here, and then price ends up building a lower high. So now we have a lower high. So now we have our second lower high. So that means anything that breaks above here will start an uptrend, because price should not break a lower high if it's trying to go down. So if price is trying to go down, it shouldn't break these levels. So once again, go back and watch video number 1. Price should not break its structure unless it is reversing. What we start to see here is price makes that lower high, and then it also makes a higher support. This is what we don't want to see. So now we don't want to see price make higher supports. So then we can either exit the trade here. We can exit the trade here and be like, okay, that was our trade. You can go based off that, and we'll wait for our next setup. So notice how price starts to build this uptrend. Like I said, if price breaks above here, it's going to start that uptrend, and we start to see here. But then notice this, right? So this is what I explained in the first time I explained it, but the video wasn't recording. Let me make sure I'm recording this time. Yep, you can see me. Yep. So watch this, right? People will say this, right? We have price building up, hasn't broken the structure, retesting supports, and then we have this right here, right? So we have the support here, makes a new high, corrects, and then price starts to maintain this level right here, so it doesn't go any higher. So then you would have drawn your support and or your high and your low. Excuse me. You would have drawn your high and your low, and you would have been like, okay, Sai, it broke to the downside and gave me an indication. What did I say, right? You're not supposed to, because some people would have just sold based off, oh, Sai, you said if it's under a level of support, you're supposed to sell, or whatever the case might be. But remember, your first 2 steps will save you from getting into fake out trades, right? It will save you from getting into fake out trades. This is price grabbing liquidity. So now it calls sellers to get into the market just to wipe them out, right? And then remember again, right? Boom. Here we have a indication above this level. And I'm not saying take this trade, but I'm just saying how, you know, that second time around will most likely save you and get you into a better trade. And instead of trading that breakout, right? I told you throughout this whole course, I'm gonna show you examples of where every step is going to save you from something. So now we have an indication above this swing high, above this level, it makes a new high. So our indication, price corrects. What is a correction? Corrections happen to grab all the breakout traders and grab liquidity from those people and then continue later on. So now we have price grabbing liquidity, tries to break that structure to confuse people to grab all liquidity as possible, and then continues back above this level, which you could have traded off of, back above this level and targeting that high. So targeting where the indication came from, right? You could have did that. Not saying I did that, but I'm just saying you see how ICC plays a part. So now overall, we're looking for those sells and we're waiting for price to change trends, right? Here we don't see price trend down, and we continue to follow this uptrend. And then price gets to a certain point where it makes a high. So now we have a high here. And then where's our support? So our support is what caused this high, right? So what caused this high, and then our high. And then you start to see price break under once. This doesn't mean we sell yet. Just because we're looking for sales and price broke down once doesn't mean we sell. What confirms it is once we have our high, we have now a new low. So our indication, you see price correct, make a lower high. So this shows us price doesn't want to go higher than the previous one. So now we have our indication, our correction, and price continues to go back under this level. And what we can do is, once again, target here or put our entry here under this level. So we're selling when price gets under this level, and then we can put our stop loss either here, or you can put your stop loss back above the level that was created. Most of the times you want to use this one because your overall needs some room for your trade anyways, especially trading NASDAQ. And then what are you going to do? You're going to scale back out to that 1 hour time frame, and you're going to target where the whole indication started in the first place, which is this new low. And then overall, once again, I'm gonna put my trades back up here and show you that I've taken these trades, and overall you can see how I enter. So overall you'll be looking for this as well. And that is the continuation. That's the entry model that I use. It works efficiently, as you can see. And yeah,